Hi everyone, I'm back with another 5-minute stock analysis, this time on Marqeta. A pretty interesting company. It's a modern card issuing platform. It's only 11 years old, it's still founder-led, and it's about $12 billion market cap as we speak. It IPO'd in about June this year, so it's only 5 months or so old. Very interesting company. It offers an open API to create advanced infrastructure for personalized cards pretty quickly for businesses, and it gives advanced analytics and business insights along with this. So in a nutshell, it's a business-to-business payments card infrastructure provider. So it allows businesses to create virtual and physical cards relatively easily, and importantly, they can flexibly change the use of these cards for both the physical and the virtual. So it's a very customer-friendly offering, and you can see that by its uptake with large companies. The biggest customer at the minute is Square, which is about 68% of revenue. So there's a slight customer concentration issue. This is coming down, so it's down from 72% in the previous quarter. So DoorDash is a really strong example of how Marqeta works. They made a specific card for Dashers, so payments only go through if the Dasher is in the correct restaurant at the correct time, paying the correct amount. So these type of just-in-time payments is something specifically for DoorDash, and it's really personalized and really well received by DoorDash. So these are just a selection, not in no particular order. Obviously, Square's the number one, but Affirm, Instacart, JP Morgan Chase, Klarna. I think interestingly, you would expect JP Morgan Chase to be able to do these types of things on their own. So it's interesting that they've gone with Marqeta. They also helped Goldman Sachs create the Marcus account. They're partnering with Coinbase recently to try and get a crypto payments card. One of the most exciting things about Marqeta is in the most recent quarter, customers out of the top 5 grew volume at 226%. So that is really outstanding and really great for the diversification of the company. So total processing volume is a key statistic for this because Marqeta makes its money in a very similar way to Visa and MasterCard. So with Visa and MasterCard, payments volume is also key. So it takes a roughly 1% transaction fee. So again, total payments volume absolutely key. And this means that the TAM is essentially card payments. The TAM of this company is absolutely enormous. A multi-trillion-dollar market to aim at. So total processing volume up really nicely year over year, 60%. Very strong growth, and this is only going to continue with the recent wins. And it's nice that Marqeta will grow in line with these companies. As you can see, it's partnering itself up with high growth companies, because as they grow, Marqeta grows alongside in this type of usage-based model effectively. Quarterly net revenue, again, in line with total payment volume, just under 56% of a year to be expected. Revenues based on the total net payment volume. This is really strong, and I hope it continues at this sort of pace quarterly. Quarterly gross profit. So gross margins around 40%. This is strong, and I hope increases over time. It's not unbelievable, but it's strong. It's not SaaS companies, but it's a very strong gross margin. Whether they can improve that over time, we'll see. But it's certainly improving year over year, and gross profit has increased 67% year over year, which is excellent. So looking at Marqeta stock rather than Marqeta the business, it's around $23 as we speak, or market cap of $12.6 billion. Below its 200-day average, near its 52-week low of 20, and miles of its high of 37. It's significantly down from its IPO price, around 20% down, and it's sitting at price sales of about 32. Not ridiculous, I don't think. It's founder-led with a passionate and completely competent founder. It's growing 60% annually. It has solid margins. It has big customer names that are behind it, and this is a very sticky platform, so you imagine these are going to stay long term. It has a huge total addressable market that is really just scratching the surface of. I mean, 100 or so million in quarterly revenue on a total addressable market that is in the multi-trillions. They only need a really small slice of that to become an absolute beast of a company. I think most importantly, and what makes me so attractive to Marqeta as a business, and why I think this valuation is justified, is the caliber of customers they're adding. So you saw already they have Square, DoorDash, Affirm, fast-growing companies. But in addition to that, just in October, they added Uber, Bill.com, and Google Pay. I mean, this is just ridiculous, and that is just the three biggest names the customer. They added a ton of other customers, and that statistic I mentioned earlier, that outside of the top five, payments volume is growing at 226%. I think we could see real acceleration in growth, and if it keeps the same multiples, I think the stock could explode in the next 2 to 5 years. It's definitely on my watch list, and I'm really holding over the trigger, looking for a little bit of a reduction in price, but I don't want that to keep me out of the story. Thanks, I'd appreciate it if you could like and subscribe.